Good afternoon to everyone watching us. We welcome you back to our series titled Personal Finance. I'm still your host, and my name still remains Osu Echao. Today, we will continue with our studies that we started last week on investment. That is, today is the part two of that series. And before we start today's education or today's series, I will urge us all to kindly subscribe to all our social media platforms, and our channel or account name is Adkwart Studios. Adkwart Studios on Facebook, on Instagram, on Twitter, on YouTube. You just search Adkwart Studios and then you subscribe. You like our videos and then you share with your colleagues as well. Without much ado, um, I will start today's series, or I'll start today's education. Last week, we learned something about fixed income securities or fixed income investments. So you got to know treasury bill, treasury notes. They are fixed income securities, and the reason why they are fixed income securities is because they promised fixed returns within a given period of time. So that is why it's a fixed income securities. We got to know some of the advantages and disadvantages of treasury bills that it's available for us to invest in. So today we are moving into another investment instrument or investment vehicle, that is real estate and then equity or stock. Real estate, equity or stock. So equity and stock, they are the same, or you can say equity, stock or shares. They are all the same. So when we say shares, when we say stock, when we say equity, they are all the same. And then we also look at real estate, which is another form of investment vehicle. We also look at that. Okay, so let's start with equity or stock or shares. I believe a lot of people have heard these investment instruments, and you hear people, I have shares in this company, I have stake in this company. What all that means when you talk about having a share in a company or buying the shares of a company, what it means is you own a part of that company. You own a part of that company. So when you buy a company stock or a company shares, that means you are part of the business and you are part of the company, and whatever profit the company will make at the end of the year or at the end of a given period, you are entitled to some. And a lot of people just go about buying shares because they've heard buying shares in company is profitable, or you can get dividends at the end of a given period. But most people, what I've realized is they don't do research on this, some of these things. They just jump into it, and then at the end of the day might lose their monies. So today we will dive into the advantages and disadvantages of investing in stock or shares or equity, so we get to know if it's good for us or it's not good for us. Now, I remember say sometime somebody met me and then he was asking say yes say about shares or company bimo, and the advice I gave the person is say it's good only if say while your research about the company and you know the company is doing well on the stock market, and then their prices appreciates. If you've done that there, it's good to invest in that company. You don't just go about say Matiso company way, a big company, they're on the stock market, so I can just go in and then buy shares without doing research about the company. It's very very important before you buy stake in a company or you buy a share in a company. You just research about the company. It's very important. And then not every company um, is worth buying its shares. The reason why I'm saying is a company B or they are not listed on the stock markets. into taught the shares. It's more or less like you're giving the money to the company, on the side, and now you are hoping say they will make a profit, and then you get a dividend. But ideally, companies are listed on the stock markets. It's prudent to buy or to invest in some of these companies. That doesn't mean say every company listed on the stock market is doing well. No, but at least they are being regulated by the stock exchange. So you can have a little trust in that regard. So for instance, if you're in Ghana and companies that are listed on the Ghana Stock Exchange, so they are being regulated by the stock exchange. So when you are buying a share in that company, it's not that a big deal. But some companies, they are just let's say you've heard of a microfinance that is operating, and then you just want to be part of that microfinance into or capital kakra when say be a 5,000 6,000. So there are quarter shares or some microfinance nima compared to those that are listed on the stock markets. No advantages not for those that are listed on the stock market is higher than those that are not listed on the stock market. Into Let's try as much as possible to do some research on companies that we want to buy shares before we do that. And then again, not everybody is abreast with the stock markets. Not everybody knows how things are done on the stock market, how the market performs. Buying shares on the stock market is like going to the market to buy, let's say, a tin of milk. Yeah, so the stock market is a market, a financial market where you can go buy the shares of company A, a little share of company B, another for company C. You can do that, and then you monitor the growth of that company in terms of the share prices, and then hope you get some dividends, or at the end of the day, you sell your stock and then also get some profit out of it. So we have people who are knowledgeable when it comes to dealing on the stock market or trading on the stock market, and these people, we call them brokers. So assuming you have interest in investing in equity or investing in shares or investing in stock, and you don't have any knowledge about the stock market, you don't know anything about it, the best thing to do is to consult a broker. Who will give you advice on what to do, when to invest, when not to invest, or when to disinvest. So it's very, very good you consult a broker, and then that person assists you. And always they come with a charge. So the broker will assist you and then charge you something small for the services that they render to you. So brokers are there to assist those of us who don't have much knowledge on the stock market or don't know how the stock market operates. They can help you trade on your behalf. They can help you trade on your behalf. So that is equity investment. I don't want to go deep. I just want to give brief explanation. I don't want to bore us with a lot of explanation. So basically, when you talk about equity or share or stock investment, all that means is buying a part of a company, buying a part of a company, buying a part of a company. So if you say you buy the shares of Adkwart Studio, that means you have a stake in this company, and when we declare profits, that means you are part of the profit that we declare, and you should get your part. Okay, there are some advantages and disadvantages in investing in shares or equity or stocks. It's not always the case that whenever you invest you get returns. No, there are cases when you invest you do incur losses. It's not always the case that when you invest you make profits. So unlike the fixed income securities like the treasury bill, the treasury note, that your returns are guaranteed, your returns are fixed. um, um, with a share investment or equity investment, it's different. Okay, so let's look at some of the advantages of investing in stock or investing in shares. One, You don't need a lot of money to start stock investing. You don't need a lot of money to start stock or shares investment or equity investment. You don't need a lot of money. The reason why we are saying you don't need a lot of money to do is you are buying a part of the company. So let's say the company is worth 100,000 Ghana cedis, but you have like 10,000 cedis, or let's say 5,000 cedis, or let's say 2,000 cedis. You can be part of this company, or you can be a part owner of this company with your 2,000 cedis. Instead of raising a capital of, let's say, 100,000 cedis to start this company, with a minimum of with as little as 2,000 cedis, you can be a part of a company that values around 100,000 or more, or a million Ghana cedis in value. So you don't need a lot of money to start stock investment or investing in shares. That is one. And then also, it's easy to buy. It's easy to buy shares. It's easy to buy equity of companies. So as I said earlier, if you don't have knowledge when it comes to the stock market, all that you need to do is to consult a broker who will do that, because that is the work of the broker. They sleep, they wake up, they eat, they drink the stock market. So every day they are monitoring what is going on in the stock market. So if you don't have knowledge, you can just consult them, and it's easy to do. They will be on the side to do that for you. So buying on the stock market is like, as I said earlier, going onto the market to buy a tin of milk is as easy as ABC. The same way applies to the stock market. So it's a digital market. You just go, if you know what you are doing, it's easy for you to do that. And then also, buying from the stock market or buying a share of a company means you are taking advantage of a growing economy. So whenever an economy is growing, the companies in that economy, or the companies that operate within that economy, also grows. So let's say country A, the economy is growing, and the companies that are in the country is also growing. That means if you have a stake, or you have a part of a company in that economy, definitely you also make some returns, or you make a good dividends at the end of the day. Don't forget, that is the reason why when Ghana was downgraded, a lot of people were very sad. A lot of people couldn't take it so lightly, because when you are being downgraded by the external world, that means getting investors into your country will be difficult, because people might not take your economy as an economy that is growing or that is booming. So definitely it will affect your investment. So whenever an economy is growing, that means the companies that are in that economy will also grow, because they will get a lot of investors coming in to invest in them. And then if you also take advantage of that, that means you are growing your investments whilst the economy too is growing. So that is it. We have three advantages of investing in stock. I've just shared three advantages of investing in stock or shares with you. Before we go to the disadvantages, talking about equity investments, I've just talked about one side of it. The other side of equity investment is starting your own business, or starting your own company or job. So let's say you have 200,000 Ghana cedis that you want to invest in a company that is listed on the stock market. If you don't invest in that company, and then you push that money into starting your own business, that is another form of equity investment. That is another form of equity investment, because that capital that you've pushed into your business is your equity, or your share in that company. So there are two. Either you buy from the stock market, or you buy part of a company, or you start your own company. That makes it another form of equity investment. And don't forget, companies, or let me say, equity investment comes with its own risk. it comes with its own risks. If you buy from the stock market or you buy a part of a company, it has its own risk. And if you don't buy from the stock market or part of a company, and then rather start your own business or your own company, that also comes with a lot of risks. So don't forget, equity investment comes with a lot of risks compared to fixed income securities, that's the treasury bill or the treasury note. So let's take note of that. You can either start your own company with your own with your capital, or you can buy a part or a share in a company. That is what makes the you don't need a lot of money to buy or to start a stock investment an advantage here, because if you are buying from the stock market compared to starting your own company, you need a lot to start your own company. But buying from the stock market, as I said earlier, you can start with about, say, 1,000 cedis or 2,000 cedis to earn a part of an investment. And citing an example, I think way back 2019, MTN released their share, or they did their IPO, initial price offer, and then a lot of people went in to buy shares from MTN, or when they were listed, a lot of people went in to buy. So when you hear about companies issuing shares, you can go, if you have the funds, you can go in and then you make a purchase or you buy from them, or you can consult a broker who will also help you buy from companies that has been listed on the stock market for long, and then they've been operating for long. Okay. Then again, let me add two of the advantages to it before we go to the disadvantage. Another advantage of investing in equity, that is buying a part of a company, not starting your own business, buying a part of a company, is you make money in two ways. You make money in two ways, and in this case, it's not always the case. It's not always the case. So making money in two ways. How? One, you can make money from dividends that will be paid annually, or as and when profit is declared. You can make dividend, because when you buy part of a company, at the end of the day, when the company makes profits, you have a share in that profit, so you can make dividend from that company whenever they declare profits. And then again, when you sell your shares, and then the price that you bought it, you sell it higher than the price that you bought it, that means you've earned some profits on your on the amount that you invested. So let's say you bought a share of company A with 1,000 cedis, and then the price per share was, let's say, 1 cedi at the time that you were buying your share, and then you've held the share for, say, 6 months or 1 year, and now the price per share for that same company is selling for, say, 2 cedis 50 pesos. So that means your 1,000 cedis is no more worth 1,000 cedis, but rather it's worth 2,500 cedis. So if you sell your shares around that time, you get 2,500 cedis instead of the 1,000 cedis that you initially bought the shares with. So you see the two ways you've earned money. So you can earn money from the dividend, or you can earn money when you sell your shares. And the reason why I said it's not always the case, a lot of people buy shares in companies with the aim of getting dividend at the end of the day, but they don't. Because buying shares in company depends on the value of shares that you have. So let's say a multi-million CD company, and then you buy shares worth 1,000 cedis. You're a part of that company though, but I bet you at the end of the year, when they are sharing profits, your 1,000 cedis, the number of shares you acquire in that company won't be significant to guarantee you some returns or guarantee you some dividends. And I met one lady who complained to me some other time that he bought shares in some company, and perhaps she heard when you buy shares in companies, you get dividend at the end of the year. But looking at the money that she invested, and then the dividend that she was getting, it was too low. So I asked her how much she was earning as dividend, and she told me the first dividend that she got was like 1 cedi 20 pesos, less than 2 cedis. You can imagine, less than 2 cedis. So buying shares with the aim or with the motive that you are going to earn dividend. Let's say you've bought shares with 5,000 cedis, and then you hope at the end of the year you can get like 1,000 cedis, but rather you get like one cedi 20 pesos or two cedis. It will be disheartening. So not always the case that when you buy shares you are going to get dividend. A lot of people have shares in companies, but they are not earning any dividend because the value of their shares are not significant. The value of their shares is not even up to one share of a company. So at the end of the day, they don't get anything. And also, whenever you buy equity, it doesn't mean at the point that you are selling your shares you also make profits. No, it depends on the value or the price of the share. So as I gave a classical example some minutes ago, you can buy a share for 1 cedi today, but let's say in 6 months time or in a year time, the value or the price of the share will drop to, let's say, 50 pesos. So if you are selling your share around that time, that means you make a loss. Your 1,000 cedis, you won't get the same 1,000 cedis, but rather you get 500 cedis out of it. So it's not always the case that you can make two returns or two-way returns from equity investment. You can be lucky. It's possible though, so you can be lucky to make two-way returns when you buy equity or when you invest in shares. But bear in mind, it's not always the case. So you don't say, oh, also said whenever I buy stocks or whenever I buy shares or equity, definitely I'm going to make two-way returns. No, you can even make zero return from your equity investment. It's possible. Okay. And then liquidity with the stock market, you can sell your shares at any time that you want to, and then recoup your money back. So let's say you push say 1,000 cedis into company A's shares, and then in about 3 months time you need your money. You can just go and then sell your equity and then recoup your money back. So in terms of getting your funds in liquid, it's easy, and then you can do it quickly with low transaction charges as well. So you can do that anytime. And then also we will talk about that in the disadvantages. We will talk about that in the disadvantages as well. Okay, so these are 5 advantages of investing in equity or shares. 1, we got to know it's easy to buy. 2, you don't need a lot of money to start equity or stock investments. You don't need a lot of money. 3, you can make money in 2 ways. That is 1 from dividend, and then 2 from the profit that you earn on selling your shares if the price of the shares increase. And then 4, liquidity. In terms of liquidity, you can turn your investment into liquid easily by selling your shares and then getting your money back. And then 5, you take advantage of a growing economy when you buy shares of companies that thrive in economy that are booming. So you can also take advantage of a growing economy. So these are the 5 advantages that we've learned from investing in stocks or investing in shares. Let's come to some disadvantages. There are disadvantages to investing in stocks. There are disadvantages in that. So let's come to disadvantages. 1, the first disadvantage of investing in stock or in shares or in equity is risk. The first investment is risk. Last week I told us the higher the risk, the higher the profits. The lower the risk, the lower the profits. It's the investment term that you can just use to guide yourself, as a guide for yourself. So whenever you are investing and you're getting a higher profit or higher returns, it should tell you the risk associated with that investment is very high. And then also if you are getting a minimum return or a minimum interest rate or a lower interest rate, that should tell you the risk associated with that investment is low. So risk. When you talk about risk, what does it mean? The risk of losing your money, the risk of losing your principal. So you can buy shares, and then at the end of the day, you lose everything. Everything. In what way? So let's say you buy share of a company, and at the time you're buying the shares, the price of the share price of the company was, let's say, 1 cedi to a share. and then you bought 1,000 cedis. So that means you bought 1,000 shares. But it could be that at a point in time, the share price of the company will run into the negatives or run into the negative. That means whatever you invested in, you've lost that money. It's possible. It's possible. And a lot of people lose money on the stock market. They think they've been defrauded, or they think they've been scammed or whatever. No, that is not the case. That is why I said before you invest in shares or in equity, you should do a lot of research. You should know what you are doing. You should know the share of the company you are buying, the performance of the company, a whole lot. You should know all this. And if you don't have knowledge in this, you should consult a broker, or you should consult somebody who has knowledge on the stock market. So the risk of losing your money. That means if the company does poorly, investors will sell, and in selling, the stock price will drop, and then you might lose your initial investment. It's very possible. It's likely you can lose your investment when you buy from the stock market. Unlike the fixed income security like the treasury bill, the treasury notes, that you are guaranteed of a fixed income, and then your principal is also intact. It's not the case with stock investments, or it's not the case with equity investment. This is buying from the stock market. What about I use my money to start my own company? Yes, that risk is also available, or that risk is there. You can also lose your capital, because the company can collapse, or the business can collapse or can fold up. So if you don't manage the business well, and it collapses, that means you've lost your investment, or you've lost your money. We know a lot of people invest monies in businesses or in companies, and at the end of the day, they just lose capital. People don't do research whenever it comes to investing in businesses. They'll just follow people's hearsay. Oh, I heard this business is very good. If you invest this money in it, you are good to go. You make profit. You make this amount of profit, without doing his or her own research. And at the end of the day, will lose money. A lot of people also give monies to people just to do business on their behalf, without knowing the capability of that person they are trusting with that money. And at the end of the day, they might lose their investment, or their principal. So it's very, very important you get to know that the risk associated with losing your money when it comes to equity investment is also there. But it doesn't mean every equity investment that you do, you lose your money. No, that is not. But you should bear in mind you can lose your money. I'm sure somebody is thinking, then if this is the case, why should I do equity investment whilst I can do treasury bill investment, or whilst I can do treasury note investment? Somebody is asking. Okay, let me tell you something. When it comes to equity investment, if you're lucky, as I said earlier, you can make 100% profit within a year. You can invest with, say, 1,000 cedis or 2,000 cedis. At the end of the year, you can make like 2,000 cedis returns on your 2,000 cedis investment. It's possible with equity investment. It's very possible. And two, as I said earlier, you have two ways of making money. That is, one, dividend, and then two, if the price of your share goes up and you sell, you also make profits from that, which doesn't happen with treasury bill investment or treasury note investment. You get it? And then with equity investments, your returns are not fixed or guaranteed. So you can make, say, 1 cedi today, tomorrow you can make 5 cedis tomorrow on the same amount that you invested. But with treasury bill investment, your returns are fixed. It can't be changed. It's fixed over the period that you invest in. So these are some of the differences. So you just have to consider all these things and know where you're going. And then also you have to check your risk absorbing factors. So let's say if I lose all my money, will I be affected that much? Or how much am I willing to lose if I'm going to equity investment? If you can't absorb some of these shocks, then you don't need to go into equity investment, because the likelihood of you losing your money, as I said earlier, it's there. Okay, that is it. And then also time. When you are buying stocks on your own, it will take you a lot of time a lot of time. We said earlier it's easy to buy because the stock market is an online, or let me say a digital market, that if you have the knowledge, if you know what you are doing, you have knowledge in it, you can do. But let's say you are buying the shares on your own, and then you don't have much knowledge when it comes to the stock market. That means you spend a lot of time researching. You spend a lot of time researching. Even those who have knowledge on the stock market sometimes do spend a lot of time to get the right share to buy. So you will take a lot of time to research before you can come by getting the better stock or a better share to buy, which is not the same when it comes to fixed income or treasury bill investments. You get it? It's not the same. But when it comes to the stock market, it is. So we've talked about losing your principal or losing your investment to negative because of negative investment or bad performance of the company, and then also you need a lot of time to research before you can also buy a share. And then again, emotional roller coaster. As I said, the prices of shares changes. So the price can increase today. Let's say around this time the price can increase. In about 30 minutes time the price can also drop. So the price is not fixed. So emotionally, if you're monitoring your investment on the stock market, you see the rise and the drop, and then the panic and the fear that you'll be going through when it comes to some of these things. So emotionally, you won't be okay. You won't be all that okay, unless maybe you've been on the market for long and you know how the market performs and how some of these things go about. Other than that, emotionally you won't be that okay, because the prices will fall, the prices will drop, and at times when the prices drop or you see the prices of your share dropping, you need to sell out to get your money. Somebody also tell you, no, don't sell, wait, the price will rise again, then you make profit. All these things, emotionally, it will make you uncomfortable, because when prices changes, it will affect you. It's not the same with treasury bill investment. It's not the same with treasury bill investment. Then again, then again, professional competition. When it comes to equity investment, there is professional competition. So the competition comes in when you don't have knowledge, you're not a professional on that market, and then you are dealing with professionals. It's like, as I said, look at the stock market as a normal market. You can be bullied on the on the stock market. You get it? So it's very, very important you have knowledge in what you are doing before you go on the stock market yourself to do that. Other than that, you can be bullied, or you might not be okay with the systems which will affect you. You get it? So these are some of the disadvantages of investing in the stock market, or investing in stocks or in shares. So we've gotten to know that when you talk about equity investment or share investment, it's all about buying a part of a company, and anybody can buy equity. Anybody can invest in equity. So far as you have the funds to do that, you can do that. And then you don't need a lot of money to buy equity. A lot of people think you need a huge amount of money before you can go into equity investment. No, it's not the case. As little as 1,000 cedis or 2,000 Ghana cedis, you can go into equity investment. But it's very, very important you get to know that whenever you are going onto the stock market, you should have knowledge on the stock market. You should know what you're going to do. Other than that, kindly contact a broker to assist you with your investment, or with whatever you are going to the stock market to do, because they have knowledge in that. And then we've also gotten to know that there are some disadvantages associated with investing in equity or investing in shares, which one is the risk of losing your principal or your investment money. You can lose everything, because that likelihood is there. You can lose everything from bad investments. It's possible. And then also the risk. Sorry, that is the risk associated, and then also two, the time. It takes a lot of time. It takes a lot of time to research to buy stocks or shares. If you don't have much knowledge on the stock market, you need a lot of time to research the performance of the companies, the share price, how it has performed over a period of time before you go into. So it takes a lot of time compared to investing in treasury bills, which you don't need all these things because your income or your returns is fixed and guaranteed, and then you are rest assured at the end of the period definitely you are going to get your returns. So before we draw the curtains for today's series, kindly subscribe to all our channels on YouTube, on Facebook, on TikTok. It's Adkwart Studio. Adkwart Studio. So kindly subscribe, like our videos, and share with your friends and your colleagues so they will also have knowledge when it comes to their finances. Thank you very much. God willing, next week we will come your way with another section on this series. So draw the curtains today, and then I say bye bye for the day. Thank you very much.